The Mining Indaba conference, one of the largest mining conferences in the world, takes place from next week. It's in Cape Town and it brings together some of the really big names in the mining sector. And one of those attending the event is a regular guest here on IGTV. It's John Meyer from SP Angel. John, welcome. Just catching you before you catch a flight, I know when you go into the early meetings over the weekend, why is this such a big conference? How important is it?
This has been running for 20-something years now, and it is just where the mining sector likes to get together. It originally started off with miners who were principally working in Africa, but these days it's expanded to include mining companies with projects all over the world. And so whilst there is still an African focus on it, because so many commodities come out of Africa, it's just really an enormous gathering, as the word Indaba suggests. So we go out early and everybody starts to get together in Cape Town over the weekend, and then we have a lot of sort of business matchmaking at the one-to-one event on the Monday and Tuesday, and then to be honest, we carry on having meetings through Wednesday, Thursday, Friday, just because it's very busy catching up with everybody and what these guys have been doing, often out in the field, and clearly they need support and they want to be appreciated for the work they're doing.
What are you hearing about this year's event? Clearly after the last few years when there's been various versions of lockdowns, it's been difficult, I know. But what about this event, particularly this year, 2023?
A lot more investors are attending this year. Last year they delayed it till May because of COVID. We remember that long distant memory of COVID. But it was still quite busy last year, but this is an absolute knockout. Very large investors, a lot of companies looking for new projects this year. Chinese companies coming in. There were a lot of traders around last year, and I think there'll be no less traders involved. But this year the investors are back out in force. They're looking for new projects. They're looking for things to do, for things to invest in and to take forwards, and where they can build value.
In all honesty, how are you feeling about the mining sector at the moment? I'm talking about in the context of inflation, rising interest rates, heightened debt piles, the difficulties I know that some businesses find in trying to raise money, not necessarily the mining sector, I know, but certainly some sectors are finding it very difficult to find money at the moment for investors to come in. People preferring to hang around on the sidelines until there's an opportunity further on down the track. In all honesty, what is it like out there at the moment for mining companies? You say a lot of people are going to attend. Do you see a lot of business being done at these events?
I think this year is going to be huge for doing business. Last year was quite good. This year we are seeing a lot of money available for battery metals and battery materials. So not just lithium, but graphite, manganese, all the other commodities that go into lithium-ion battery packs and electric vehicles themselves. And of course the wind turbines and the solar farms as well. So there's an entire suite of minerals ranging from silver and tin to the specific battery metals of nickel, lithium, graphite, etc., etc. So what we're really seeing at the moment is the majors have built significant teams of expertise, and they are out hunting for projects. General Motors just announced $640 million for a project in Nevada with Lithium Americas. And there's definitely more of that coming.
But of course, this is one of the themes, isn't it, in the mining sector at the moment? It's the fact that it is, so the dynamic is changing a little bit. And I know since the beginning of COVID, we're talking more and more about battery metals, new tech metals, as I think some people call them, because they're generating this move into renewables particularly. How much of a different sort of feel is there in terms of what people are now talking about? Because previously it was just a question of digging a hole, getting a mineral out and selling it to whoever it was that wanted to buy it. As you say, the emphasis now very much on these materials which are going to drive future development and future industrialization.
Well, it's still very much focused on digging the holes and pulling the material out. The next bit that everyone is going to have to focus on is the metallurgy, is how do you create the exact chemical product that you really want? So when you produce, are you going to produce lithium hydroxide or lithium carbonate? If you're mining graphite, what sort of spherical graphite is that going to be? How does that compare with, let's say, synthetic graphite that comes out of oil refining, which is very expensive stuff. And in fact, the lithium, the battery metals industry, particularly for lithium-ion batteries, is focused on how to reduce the cost of these commodities, how to improve the performance. So whilst we don't see, well, in fact, we see the cost of graphite, for example, rising, but the price of natural graphite will probably rise in order to take market share from, as it takes market share from synthetic graphite, which is incredibly expensive. But that process should enable the gigafactories to reduce their input costs by quite a margin. And of course, the name of the game right now is not so much about price. It's just about securing products. So we saw an extraordinary deal last week where the Chinese company Hunan Mining came in and put $100 million into, or offered to put $100 million into Codown Minerals, which was one of our clients, with virtually no strings attached. It's a very simple deal, and not the sort of thing we normally see in the sector.
Yeah, just want to talk a little bit more about the general economic environment. We've just seen the Federal Reserve raise interest rates by 25 basis points. I know that's going to come as a relief to some people that have been looking in the backward mirror. Of course, we saw 50 basis points before the end of last year, and then 4 lots of 75 basis points. Interest rates are substantially higher than they were this time last year. What sort of difference does that make to the sector? Bank of England, European Central Bank, same sort of thing. Foot on the pedal. It's a question of just how far, I guess, they go. But what sort of damage is this doing to the sector? Or is the sector taking it on the chin?
The sector's definitely taken it on the chin. In fact, commodity prices have generally risen despite rising interest rates. In fact, if anything, the quarter point announcement last night from the Fed means that the Fed is really looking for growth now rather than just suppression of inflation. Again, it suggests to us that inflation is in fact coming down. No surprise there, because oil and gas prices have fallen heavily. And so with the Western world looking again for a new growth profile, the European Union probably missing recession, the UK potentially going into recession, though I think there's a good chance it won't. So we seem to be heading back towards a growth phase, and as they say, risk is going back on again.
And of course, part of that growth phase means that demand increases. When demand increases, supply's got to keep up with that. Otherwise, it all gets a bit out of skew. And I think we've been talking before, haven't we, about this idea that we've got this potential for a switch around in demand and supply on copper, that we could well go into deficit. What sort of price action do you think this could well develop into? We've got copper at the moment trading at 9,100 on the LME. We've spoken before about this 10,000 level, but it certainly seems to me like if we do get this move around from from surplus to deficit, it could even go higher than that. What are you hearing in terms of anecdotal evidence about the price of copper, for example?
Well, what we know is that there are problems with the production of copper in many parts of the world. Peru have all sorts of political strikes going on at the moment. There are various interruptions in Chile. And we've seen other problems elsewhere. So all the copper and all the physical copper seems to be being bought up at the moment by various traders. There's a great anticipation for an enormous return to work in China. We'll see what form that takes, because they're not really over COVID yet. They might think they are, but who knows? So if China really does return to work, and if the West really does avoid recession, that looks likely now, then copper prices are going up. As we say, the risk is on the upside, because the downside risks feel like they're quite limited from where we are at the moment.
Is the same demand and supply imbalances due to come down the pipe as well for other base metals, aluminium, zinc, nickel?
Yes, definitely. We've been looking at tin most recently. Problems there. Indonesia doesn't want to export tin anymore. They want people to build factories that use tin in Indonesia. That's another supply disruption. Problems in Peru with the supply of tin out of mines because of the political demonstrations going on there and general unrest. So that's just another example of a market which is suffering. If we look at nickel, there aren't any new nickel mines in the world right now. There are a few people thinking about it, but you require a higher price to get these things going. So there's a lot of problems for for mining companies to develop these projects. It's been difficult to raise capital over the last decade. And what that means is that there's quite likely to be a shortage developing from where we are now.
Yeah. Okay, look, John, we'll leave you there. Thanks so much indeed for joining us. Off now to Indaba as he is at the weekend, and we'll catch up with John again when he returns. John Meyer from SP Angel.